I love that new intro. And anyway, so today's the daily recap. After yesterday, again, every bear in the country goes game over, game over, game over. I feel like I have to jump on the bandwagon and go from 9 positions to 4 or so, with 2 of them being gold and silver. And then all of a sudden, you come in today, futures is down a little bit, and then the usual suspects just show a ton of relative strength. After a little weakness in the morning, boom, Amazon positive, looking good. Google up first, showing relative strength. Apple, unbelievable, red dog reversal 80-20 trade. And then obviously have a few others here and there, but lo and behold, end of the day, we pushed a little bit below where they were selling and selling and selling the futures, but there was no traction. The bears had their turn to press a little bit after yesterday's outside day, and they had absolutely no power. If you take a look at the chart of the S&P, you'll see, here we are, the SPX. This is the upper end of this long-term ascending channel. Here's the low, here's the uptrend we've been following, here's the, as well, but the top side of it, we pushed through yesterday, couldn't find any traction, pushed through the prior high of the year, came off it, and it was definitely an area to say, okay, take some off, let's see what happens today. You look at what happened today. We traded a little bit below yesterday's low, 1410, but what did we do? Went as low as 1406. Okay, and the zone was like 1407 to 1410, and then we closed back above it at 1413, building another floor within the new support of this upper accelerated ascending channel. So we're still hovering in this area. And really the telltale was this. Off the bat, selling the SPX. I wrote a note saying, you know what, they might be trying to push the market through the lows, but high beta is not going lower. Banks are hanging in there. Casinos are sort of strong. There's things going on here. There's no need to just run out of Dodge. And if you look at Apple, Apple had an unbelievable move today. Like it doesn't get better than that. It didn't even come in and test the 644. What it did is it came briefly below the 650.33, stopped some guys out that were trading versus lower level, got some people short, then reversed, and showed commitment and closed really strong. Not much correction here. If I was, short, I'd be scared. I know we made some Q money yesterday, but that was one day. Okay, there's a lot more money on the long side than the short side. You look at the 5-minute chart. Let me just dissect it for you real quick. So here's what happens. Okay, this is why this 80-20 red dog reversal works so well. Because people do not know if yesterday's low, which was 650.33, is the low. So what happens when you break the low? Guys get out, guys get short, thinking, oh, maybe we go to 644, maybe we go below, which we could have, but we didn't. We went below, all of a sudden everyone got stopped out, guys got short, boom. You just got squeezed, and now you're like, oh my goodness, I have no Apple from yesterday. Then what'd you do? You saw us flag, hold higher. I think this is when I sent out the little tweet saying I'm long with the price point strategy that we had online at 845, talking about 650.33, which was right here, the prior day low, as your strategy to get involved. So I'm long verse, here you go, verse 648.11, $2 stop. Then, all of a sudden you had a nice clean move, continuation. And then, in this little area, I actually was a little risk averse. I'm like, you know what? I just made $7, $8 in this move. I'm trying not to be in any swing trades. I want to just make cash flow. We're coming into Labor Day. It's been an unbelievable August. I don't want to have too much risk on. Let me get out. So I got out a little bit. Then all of a sudden in this bar, I'm like, you know what? We're holding in there. I'm gonna get long again. We had a little descending channel here from yesterday's high at 215. I think I tweeted that even. And then you had another nice move from 659 all the way to the high here of almost, it was like 661-ish, and made another nice move. Then you had another move over, over lunch. And then all of a sudden, we just broke this high and trended up from 664 all the way to the highs of 669. And I had to take a little long overnight because I'm thinking, even if, unless it's like news Apple specific, even if we open down a few bucks, it goes positive. But, I do think it could open up and might as well be involved. In the last 3 weeks, I've been long this stock probably, if there are 15 trading sessions, 13 of the 15. One day I didn't take it, which was yesterday, and that was a day to be short, and I didn't take it on purpose, so I had the opportunity to sell because I felt as if we were a little stretched, but now we're flagging again. So anyway, you go to Google. I thought maybe we could pull in a little bit further, but look what happened here. We didn't make it down to this gap area, this 648, this 21-day moving average. We held the upper flag. It was strong early, and then it went. And now it's near the highs again, and it's still trying to hover, by these old highs of the year, not giving way. So at this point, if you're a macro investor in Google, you're still doing good as an intermediate trend watch. If you got in today, great. I didn't because, again, I was trying to be a little risk averse. I was trying to be cool like everyone else in the Twitter feed saying we have to pull in 3 to 5%. We have to pull in 10 to 15%. Couldn't even get below 1407 and hold it. Anyway, look at Google. Looks unbelievable. Even Amazon, which has been really choppy. It, too, had a nice move. It was strong early, continued, and now look at this one, holding where it had to. Here is your first 230, pushed through on earnings, came back, retested. Next time we got involved was right around here, 235, good move. Then what did it do? It went sideways, pushed, and now it looks like it's ready to break again to the upside. So we'll see what happens tomorrow. We'll see if we can get through today's high, and then all of a sudden, you're talking highs of the year, if you sneeze on it, which is right here. Look how close that is. Wow. I wouldn't want to be short this thing. Even if people say, oh, it's going to push through and fail, whatever, it's acting really good above the moving averages today. It flexed its muscles all over again. And then on a different note, which I messed to trade up, was Baidu. Baidu's been beaten down from 135. Chinese market's been real weak, this and that. I tweeted today, it was like 120.50. I'm like, I like Baidu versus 120 or versus the lows of the day, depending on how you want to treat it. Again, trying to be a little too risk averse. I got away from it. I stopped myself out 5 cents early, which I shouldn't have. And then look at this nice little move. I know, this is when you could have got stopped out when it broke this upper area. So if you did there, you had a chance to buy back right around the 50. And it did close a little bit off the highs, but it closed okay. Now you have a new point of reference, and you could have made money. Unfortunately, I just was a little risk averse, and 120 was the stop, and it never went below. On this bar right here, I got out, and I'm like, you know what? It's been a great few weeks. I'm on the highs of my year, highs of everything. Let me just get out of the way. Got out, and then PS, look what happened. Could have made a lot more money on the day if I would have just stuck to my guns. This was really the stop. Like, you really should have been, if you look at this little wedge here, this is what I was watching early on, just to give you some more tactical type of color here. You look at, I just lost that. So you look at this wedge type pattern here. This was when it started to look a little bit better. Wedge looked like it was going to fill the gap. I started buying around here. I bought through 121. Sold a little bit, then it came back in. This shouldn't have really happened in my opinion, and then all of a sudden it hovered below it. So on this bar, I'm like, you know what? Let me just save myself some money. Let me get out, got out here. Meanwhile, it didn't save myself money. I lost money because of it. It never broke. Look at this, 120.02. So from here, straight beeline move to 124, 4 points higher. Anyway, your real stop should have been the low of the day, which was 119.26. That's why I talk about having a real stop in versus a stop to count your money so you don't lose. And I was just like, happy, caught a great trade in Apple, my silver, my gold, everything was working after a few weeks of everything working. I'm like, you know what? Why mess with a weak stock? And PS, my stop was right here for no reason whatsoever. It should have been actually down here, and then I missed what was a decent move. And now, looks like it could retrace a little bit. Think Equity came out with a 180 price target. Perhaps it gets up to 123, 125. We'll see. But another entry, which guys are like, you can't trade these markets. I don't know what they're talking about. Look at this silver trade. Anyone that knows me, anyone that was on our community in the virtual trade floor in the Twitter sphere, I tweeted on this day. I got long here. It was in my virtual trading floor. Every note that I wrote showed that I was long silver. Wasn't long for the last few months. I got long right around here. And I said, I'm adding to my silver at 27.55. PS, look where we closed. Nice percentage move, nice 3-day move above even recent resistance. On the same day, I'm like, I'd love gold to be leading, but you know what? It's not a perfect world. Let me get long some gold. And 158 is the level it's got to get through. PS, look at gold. Whoa, look at that. This is your long as it's coming into resistance. I know we tried it a few times, lost little bits and pieces, but it's been made all back right here. Through the 200-day, closed pretty strong, and this definitely could be a new trend and worth staying with. It broke above this intermediate trend. It's above the 200-day. Definitely has room to go to 164 to 166 now. I wouldn't be getting aggressive on day 3, day 1, 2, 3, but looks good. It's come a long way down also from these highs here. So at this particular point, this doesn't look too extended at all on the daily. So I wouldn't be shorting it just thinking it's overdone, but at this point, don't be chasing and buying too much. But overall, shows you how you could time the markets. You could be a trader, you could be an equity investor, you could be an equity market timer. It all depends on what you want to do. And I feel like I've been yelling at the TV a little bit lately because everyone's saying how equities are dead. Everyone's saying how you can't time the market. Everyone's saying how the retail investor is just nowhere to be found. I personally think if you were a retail investor back in 96, 97, 98, and you got abused by your broker, you got abused by the system, you probably, if you're still in this market, you're not just calling your broker and saying, oh, buy me this and charge me X amount of money and beat me over the head. You've learned how to approach the market. You're actually trading your own account. You're getting charged peanuts and commissions, and you're educated. You're reading IBD. You're watching sites like ours, and you're making moves and you're making progress. So I do think the smart, educated retail guy who used to get beat up is in the market, but they're just doing it differently. The days of having 3 brokers that are taking care of you, like that commercial Scottrade, are just in the past. People are using sites like ours. They have online accounts. They're getting charged peanuts, and they're trying to take control of their financial future because they don't want anyone else making trades for them based on what time of the month it is and say, oh, look at this. 2 months before month's end, he's up in this position. Let me just sell it because I need to make good commission because my kid's going to camp. That's bull. Okay, you sell at the right time, you buy at the right time, you do it for yourself, depending on your time frame and what you can put in. You do less or more. Some guys do 5 trades a week or a month, and some guys do 5 trades in 5 minutes. It all depends, but it's all what you want. I'm not here to preach. You guys are here for a reason, and you're taking the steps in the right direction. Scott Redler, T3 Live recap, getting into Labor Day weekend. Make sure you take some time, recharge those batteries. I'm a bit tired. But again, with the market action the way it is, it's hard to step away from the computer. See you tomorrow morning with Jill. Have a good night.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Come down and expect to have a great time.